The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me. What can you say? You're happy? Squeezably soft host. Once more, did we go into the breach, dear friends? So what's going on today? Well, did I just close everything? Did I accidentally click on something? I don't know if I did. Maybe I did. I may have closed all my open windows by accident. We'll see. Oh, yeah, I did. Okay. But guess what? They're all back open now. Okay. So what do we have going on today? Big tug of war. Kind of like the end of a football game I heard was on Sunday night that I did not watch. Kind of a big comeback out here for the dollar. It looked like they had it down on the mat. It's now down, at least the dollar index is just off 6 cents. Looks like it could close out flat on the day at $100.34 right now, but could be flat. Anyway, they had it down to just over $100, and looks like some buyers. Looks like when it gets up to about 160, 70, you get some sellers in there. You get a lot of buyers when it gets down to 100. And I think that's kind of been pushing the market around a little bit. We've had, of course, a big pop in the bonds, which was very interesting to me because the 10-year had probably the worst auction in several years, maybe 3 or 4 years for the 10 years today. So no one wants them, but bonds are going through the roof in the market today. I'm going to have to find me a bond expert that can tell me why that happens. Never really have seen it before myself. Maybe somebody around the bond market knows it better than me. Maybe there's some kind of contagion or contango going on in bonds that I'm unaware of. But, you got your nice pop out here in the TLT today in the longer range of these. It's up $1.18. I still really dislike that that's got that high volume low at 116 that hasn't been tested. And, there's a few other things out here that aren't quite lining up for a move in the market. We did go much lower to 22.85 on the S&P cash. Then they started to push it most of the afternoon. Of course, this is the day that option market makers go delta neutral. We spent a lot of time on that yesterday. What I probably didn't say, or I forgot to say yesterday, is that one of the things option market makers always know, of course, is they've got the book. They know where everybody is long and short. They know where everybody wants to get in and out. So they're not only do they give us a view into the world that they think is going to happen, but their view is based on kind of like watching poker on TV, where you actually get to see the cards that people have. In real life, making all those comments and everything probably a lot harder than just watching it post facto on television. And that's it. They've can look at the cards all day long. So we'll see what they're doing today. Again, this is one of these days where it probably pays to wait till tonight till you get all the data and you go through it and you see just where they're pushing the market around. I just don't see any juice to the upside. We've got 2.2 billion shares as we start the show. So is it okay day? Yeah. Was there a lot of volume? Kind of just ran the stops. And then once everybody tried to go short today, they ran the stops on the upside. Not a lot of juice higher out here. And, of course, we're just half a point higher in the S&P cash. Just doesn't seem like there's any gas to go higher. but every time it dips, somebody thinks that there's a fire sale on the market when it's down 0.25% and they have to pop on in. But again, not really making any money when they buy up here last few times, maybe a couple of points in the S&P, but just not that much. So that's kind of what I'm looking at here. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Most trading days. Well, I did watch the new 4 out there, and the problem is there's just nothing new. It just looked like every other 24 back for 15 years. So I'll have to continue looking around to find a new TV show, as most of mine are being canceled or no longer watchable. Tried to watch NCIS last night. Snoresville. Ugh. Yeah, Tony DiNozzo made that show. As always, we like to start the show off with a little bit of history.
Then it's all just a little bit of history repeating.
10-year auction was poor only. The bond futures ran big past 3 days. I don't know what that's supposed to mean. Maybe it's kind of. I'm not a great typist in the den either. 10-year auction was poor only because bond futures ran big the past 3 days. Maybe that's what that is. Anyway, yeah, but the Big Bang Theory is still good. It's a little off though. It's like a pitcher that's been out there for 5 years on the mound. Still good, still winning, still 20-game winner. But he ain't no 100-mile-an-hour fastball. It's maybe down to 97 now. They need to get that up and running too. Anyway, 22.94 on the S&P cash, 2.27 billion shares. And the one theory we have for bonds is they already ran hot for the last few days. So I don't know if that's true. You think that you would think that a big bond auction like that, do you think they front ran it? Got everybody to buy the existing ones before it happened? We'll have to take a look. Anyway, as always, history repeats.
Then it's all just a little bit of history repeating.
On that day in 1971, which is actually today in 1971, after nearly a decade of preparation and, of course, a lot of work by the New York Stock Exchange to keep them out, the NASDAQ market opens for stock trading on the first day as the National Association of Security Dealers automated quotation system and first displays the median price for more than 2,500 over-the-counter securities. The NASDAQ Composite Index is set at an initial value of 100. And on this day in 1971, we get the NASDAQ. And probably really on the last 10 years of the space race, we were starting to see companies like National Semiconductor, and a handful of others, Fairchild Semi, a lot of these Bay Area semiconductor stocks starting to gain traction, and NASDAQ was looking at going after that tech-savvy market in the stock market. On this day in 1971, look at that.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I had a question from Steve Rhodes, who pointed out a three-gap play. If you're unfamiliar with this pattern, basically over maybe 6 months or a year, or even longer, you're going to have three massive gap ups with some decent volume. Not a huge volume stock out here, but kind of an interesting play. And yes, this does qualify for a three-gap play. Go ahead and pop the other one up. Is that it? No, that's something else. Where's my... There it is. I labeled this out during the break, but if you want to see three very huge gaps, and it's not uncommon to actually see exactly what we have today in Coherent, COHR is the symbol. But you go back to February of 2016, and you get your into January, you get your first gap, and it's pretty big. You get second gap. It's actually kind of a gap on a gap, but still a fairly nice turnaround, and that goes back into November. And now you get the last big gap, and a lot of times they will be this far apart in time. It's not like they gap up today, tomorrow, and then Thursday, and then the stock falls apart. The textbook version of this pattern, we've seen a few times, and I think it was Priceline the last time we really saw a big monster out here. But I think Priceline was at like 320, opened at 390 or 395 the next day. That was the last gap in that three-gap play, and I think it was at 310 that day or the day after. It didn't take long for a big – oh, it was Netflix. Thank you. See, but it was and occasionally you get these. Now, if these things are going to work, normally they start rotating fairly quickly, and you go right back. And the first step on that is that they do go back and fill the first gap very rapidly. So what you want to be looking at here is the next. Does it happen the next day all the time? The answer is no. But what you want to see, or you want to get confirmation, is that within 3 days of this top one, that it does start to pull back in. and fill that gap. If it fills that first gap in the next 3 or 4 days out here, then you've got a very big high value odds that it comes back and fills the lower 2 gaps back out there. But they've got to be, there's a couple of qualifiers. If you want the white paper on 3-gap plays, I'll send you the link to it. I posted it in the den already. But you're looking for some big volume and then some fairly light volume. And then you got these big gaps, and you got monster volume again, and then some light gaps. Now, Coherent is a laser manufacturer. And if I'm not mistaken, I'm going to go back and look at this again tonight. This may be one of these stocks that's going to be hard to see this thing rolling over, mostly because they're selling a huge amounts of lasers to the military. And I don't know if that's going to change overnight unless they lose a contract or something else is going on. So I'll check this one out. But if you start seeing this thing act like it's going to pull back in there in the next 3 days, that is the confirmation for the bigger pattern, which says that this would come all the way back down into the low 60s if that does fail. Nice pattern. The volume's not all that exciting. But again, I looked at it during the break. A lot of shorts on this one. I would suspect that most of them have covered, but I would still give this thing probably 2 or 3 days. And if this thing then starts to look weak, look for it to come right back down to 160, especially if the market rotates and turns back over. 2.32 billion shares on the New York Consolidated tape out here today. Yeah, I think they charge too much for their lasers. Could be. You never know what's going to happen. Again, this isn't a company that has a lot of press on it. So it is one of these things where, you know, you could find the CEOs sold all the stock or something else. But it's for a kind of a mid-low cap stock out here, doesn't have a lot of trading information. So things can sneak up on you fairly quickly. But at this point, if you have been long in these stocks and you get a big gap like this, my rule is to sell it right then and there. Just go ahead. If you got 194 on it, just pull the trigger. Sell it right then. Because even if you don't get the full pullback, the chances of this thing going higher generally are incredibly small after 3 gap plays. So doesn't always guarantee that they fall off a cliff, but generally does have a very high correlation. I'd say 80 or 90% that it doesn't go higher, that this is the big gap. And at a minimum, it comes back and finishes and closes out this gap that we saw today. See if there's anything else going on. I wanted to get to some of the stocks that I'd been looking at and seeing how they had gone. Wanted to see today one of the better. Well, I had this chart in here in the newsletter this morning. I thought it was probably one of the better looking charts out here. If I was to go long, I said this would be the one. I don't see that much in it for the risk reward. I may be second guessing myself, but it did exactly what we've been talking about on this show for a while, and that is that this double gap occurs right at 150, and let's call it 158, 157. Let's zoom out on that a little bit and kind of zoom in here. What you have is this big gap down that occurs on the September 9th of 2016. Well, you gap back up with a huge gap over that on the 15th of November for Advanced Auto Parts. Now you're coming right back in, but these double gaps are almost like confluence for gaps. And, you know, this is something I looked at for years and years and years, and only now, I don't know if it's conditions or what, but the last 3 or 4 months, maybe even 5 months, these stocks coming back to these double gaps and acting as support has been almost a bullet for actually pulling the trigger on some of these. And Advanced Auto Parts, you gapped up on 7.3 million shares. You came into that gap yesterday with 1.3 million shares, and it was a gap within a gap. Both gaps had 1.4, 1.5 million shares. So not all that, but there was a lighter volume from both of those gaps yesterday, and then you get the reversal out here today, which is a big sign. Of course, auto parts probably is, we kind of had a big sell-off in this thing going back, 7, 10, 12 trading days ago when Amazon started saying that they were getting into this business. I just, I bought parts from Amazon before. It's kind of a little different. Most of the stuff I buy for Amazon for car parts is not stuff that Advance sells anyway. Replacement headlights or a new tail light or something. You can order those things from Advance, but man, they're very expensive. But if you want to go pick up a gallon of antifreeze, it's not something I normally buy from Amazon. Anyway, probably the best looking chart going into this morning, and it's acting accordingly.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Anyway, Advanced Auto Parts, one of the better looking stocks out there, at least at the moment. Let's take a look and see what else we have out here. Wanted to see how Amerisource was testing its previous high. Still no volume. We get into this one, which is the August 2nd high at 89.84 that had 5 million shares. Last 3 days, to 2.8 million shares yesterday, 2.1 million shares today, 1 million shares. Energy off the bottom, fairly good on this one, but pretty much sucking air up here at the highs. Arcadia Pharmaceuticals, Arcticant, Adtran. There was a couple out here I wanted to see. I can't remember. AK Steel. Now, I'll talk about gapping up a bit. This one has finally come back down to its first, or the last real open gap, which is on the 14th of November for AK. That gapped up with 38 million shares, tested it a few days ago with 30 million shares. You know, you're not getting much movement out here, fairly light volume today. So I'm not seeing anything there that tells me that something has changed. Ambarella, of course, this company is tied at the hip with GoPro. It's up kind of on very light volume out here. It did find support, as we were talking, I don't know, a week ago, as it came back into this gap, which is back to what, June 3rd of 2016. Kind of got right into it on January 23rd, and it's bounced. It's come up a little bit. But again, this company tied at the hip with GoPro, and you just wonder when GoPro fails to pay them or something else happens out there and the other shoe drops in that. Ambac Financial. This one has been coming back to a couple of gaps, but still not much out here. 7. Is that, I was looking at American Homes for Rent. There's something else going on here. Was there another one out here? No. Let me think. There were a few out here that I wanted to see. Cabela's, CAB. This one basically has filled a nice gap. You would like this thing to pop right back in. This gapped up with almost 20 million shares. That's on November or October 3rd of 2016. This gapped up with almost 20 million shares. Came into it, filled that gap on less than 2 million shares yesterday. Just a little doji out here today. So what you would think is tomorrow you want to look at this and see if it opens lower. If it would move lower, then maybe that's a halfway move on the way down. If this thing starts to build support at 53 bucks, could be kind of nice. Now, I did gap down with some energy on the 30th of December, so that would be your target. So maybe there's $6 to the upside on this before you run into some heavy down turn in this one. You can call me at 877-927-6648. You can also email me at path@tfnn.com. Something about Intuitive Surgical. Something about maybe they'd be caught if they try to export the Intuitive Surgical devices. See what else out here. Coca-Cola Company getting back into resistance. Wanted to see how Kamiko was doing. And a lot of people have kind of an opinion that this thing bounced fairly well. Still got a high volume high out here. Kind of whiffed on earnings. And a lot of people talking about maybe Fukushima still leaking or leaking more radioactive stuff here, that them freezing the ground way around it didn't really work. I got a few emails about that. Unknown. The downside is that you can make reactors very safe compared to what is out there in the field now. And that's always what you have to worry about is, you know, another Fukushima, 3 Mile Island, or the Russian one. But, you know, looks to me like this is probably some level of support. But my guess also is that you're probably going to need a couple of weeks of this thing banging around at over $10 to form a bottom that you can trade off of. See, Cedar Realty Trust, this thing's bouncing around the 590, 580 level. Energy, not all that exciting down here. Some of these REITs look like they've pulled back into lighter volume, but my worry is that these things just jump the break through ice and go lower one morning. Chesapeake Energy's back to a gap it had. I don't see a lot to hang my head on that one. We'll go through it. We talked about Cummins testing its high, kind of pulling back, volume picking up a little bit on this one. It's got two nice gaps, one at 130 and one at 125. The one at 125 is a double gap. So if I was thinking of shorting on Cummins, my target would be at 125 on that one. To the Canadian National Railway, of course, these things kind of bounced on a lot of optimism on Trump building. They've kind of come back as some of the lusters come off. A little higher out here today on CNI, but too light a volume out here for me to think that there's anything going on in that one. A lot of these stocks are just kind of in the halfway of pulling back down to either support levels or gaps that would act like support. This one is kind of interesting, mostly because earnings are coming up, I think, in the next week for Salesforce. We've seen some of these companies whiff on cloud sales. And probably the biggest problem is Salesforce is maybe the most expensive cloud company out there, so your risk is pretty much high. I'm trying to remember the PE on this, but it was astronomical. Of course, they are growing like a weed, but the question is, will they continue to do that? They've fallen and dropped a few times on misses. It hasn't been one of these companies that has just automatically been a winner on every single one. But sometimes it does better, sometimes it does worse. What you have to think, though, is this is coming back in to a huge supply line that goes back to August 15th of last year. That gap down with almost 11 million shares, and you kind of gotten into it when this thing spiked on the 18th of November with 20 million shares, but it couldn't hold it. And now we're back up in here in 7-8 million shares. Again, I wouldn't be playing this before earnings, but if there's a stock that has a lot of risk with probably little reward with all that overhead, it's got to be CRM. When we come back, we'll look at a few other stocks here on my list that I need to go through. Give me a call, 877-92. Oh, we got a call. I will go to them when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're going to go to David in Panama City. How you doing today, David?
Great, man. How you doing today?
Day in paradise.
There you go. Look, just wanted to pick your brain a second about Amazon. Back on February the 2nd, had that low of 828 and high of 842, and then gap down. That was the earnings play. I'm not looking to recapture as much volume, I don't think, but I bought 825 calls, which expire Friday. And my question is, I'm almost, without guaranteeing, I'm almost certain it will at least kiss that February 2nd candle of 828.26. Do you think it will actually get in that candle very much by Friday, or just hit it and kind of pause?
Well, today's kind of a throwaway day because option market makers are going delta neutral, so they push the market up, they push it down. Tomorrow, we're going to know a great deal more. I'll know a great deal more tonight when I look at the options. But I don't know. I probably wouldn't look very hard at the market today and say that it's indicative of the next 7 days. It's indicative of a lot of people going delta neutral for expiration a week from Friday.
Right.
So, you know, if I was just looking at the charts from yesterday, they don't tell me a lot. I dislike the light volume pop out here. Excellent company. They make lots of money. But it's just like all the companies that I see out here, and that is the theme is we'll start building new buildings, we'll start adding new stuff, and those are all expenses. The market really loved it when everybody just kept firing everybody and not spending any money. And Amazon's spending a lot of money.
Yeah.
You're going to open that hub up and everything else. So I don't know what we were thinking when you entered the trade on this.
Well, it's strictly short term. I got the 825s, and I'm looking for just a little pop. I mean, I got them at $1. I'm already almost, close to being doubled. But I think, obviously, if it will at least touch that candle on February 2nd, the 828.26, then I'm going to be at least $3,000. And if it'll do it between tomorrow or Friday, then...
You know, like I said, the downside here is that you probably don't get a lot of information today because the market makers tend to push everything around. So I hate to give you this one. I'm just going to say that I would pass on an opinion on options until tomorrow morning, and you see how the market opens up, because you're going to know a great deal more about it tomorrow morning than you know today.
All right. I'll probably check with you in the afternoon and see your opinion on it then.
Okay. Yeah, well, I'll be able to get, they do go delta neutral today. I'll be able to get the data tonight and see what option market makers are looking at. The problem, like I said, is that a lot of this is just pushing people up and down on a day like this. And it's more about the close and really much more about the open tomorrow and what they did in the option markets today. But I just don't get that data till later tonight. So sometimes a good time to put on a new position, sometimes not. I actually did put on a new position today, But again, yours expire on Friday.
Yes.
Mine expire out in April. So I'm at a very different time frame than looking on this Friday.
Yeah, I don't know. I have a knack for just very short-term pops.
Yeah, that's good.
I don't.
But to me, it's the longer-term trend out here is the money maker, and
right.
this one's kind of, you just if you're lucky and no one tweets something, then that's fine. I do like the fact that you were buying $1 calls. To me, you want to keep your risk kind of to a minimum in this stock, and that's not a bad way to play it. I'd much rather be in $1 calls that expired on Friday and lose my $1 than be in $20 calls that expire in this thing, in April or something, and just watch it all go away.
Oh,
so I do like what you're doing. I think it's the smart play out here for making some money. It is a risky trade. Now, normally, even when I do these, I hope that I'm making at least 3 or 5 to 1. So to me, if I would have entered this trade, I would have been thinking that it filled this gap before Friday. But I'm kind of greedy that way.
Well, that's what I'm hoping.
You can dream, can't you?
Oh, yeah. I mean, that's the thing. If we get a little bit of, a pop tomorrow, I mean, this thing can gap between 823 to 825 and get up and kiss that candle, and I can, jump out of my position.
I know. I really, it's a smart play. So I can tell you, I don't know if you can, especially in this stock or one news cycle out here, all you got to find out is that he's bought something else and it's down $20, or maybe he didn't buy anything and it's up $20.
Oh, exactly.
Right?
Yeah, I'm with you. Yeah.
So a little bit of a gamble, but at $1, the risk reward was, I think, pretty smart. Anyway, anything else?
I'll probably pick your brain tomorrow afternoon, man.
Okay, good enough. Thanks for the call.
Thank you.
And we're going to continue on with looking at some of these things. I was looking at Crocs out here. I just don't see anything. You probably should have seen this thing bottom by now, and you may have had the first little sign that it did going back into the lows of the 22nd of December. Had a couple people email me about this, and I'm thinking, I just don't know. Is this shoe ever coming back? Would be the question I ask, and I'm the absolute wrong person to ask that. My flip-flops are what I like. Crocs kind of give me the creeps. And DEPO. Now, this one's setting up on kind of a longer time frame. I would have liked the energy to be a little less on the way back, but as I've been saying, these stocks with double gaps have been just amazing at finding places to get in at least for a few days of a bounce. This one's going to be just about $16. Let's take a look at it here. And it looks like it's going to be just about $16. If you go back to the original double gap reversal pattern that set this up, you gap down on the 6th of May last year. You gap back up on the 9th of May, just the next day. Sets up a double gap. So you've got right there at 16, probably 1610. I'm going to say that's what that is. And that really is kind of a nice area to go after on Depot Med. Energy, like I said, a little bit more than you would like. But at this point, you start looking at the volumes. Now, this gapped up back on that May 9th gap up at 4.4 million shares, and that's what I like the last 2 days. Just 2 million shares on a rather large candle down yesterday, and then today just 1.4 million shares as it starts to enter that gap. So if you could get down there at that 1610 level and the volume remains light, you could get a bounce out of the thing, maybe back up to the 1850 level on just an automatic bounce out of these. But again, light volume tomorrow is going to be the key. Depot Med, DEPO. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And Akamai down with some big juice today. And it's not quite a gap play, but this thing ran back into a gap that had been around forever and was into it yesterday. This was a pretty good setup. I'd been watching it, but I wanted to get back into just a little higher and didn't get it, which was about $72. That would have been the pull the ripcord on Akamai. So it was a couple of bucks underneath what you wanted to look at, but down monstrous volume. This thing also has a monstrous gap between $39 and $46. I suspect that that is going to get filled. Hopefully this thing can get back up one more time where I can get a chance to take a swing at it. Got down to $61.54 today, so one of the big losers out here in the markets. But you're still kind of in this upper trading range. You might be able to get 66, 67 bucks out of it if we're lucky again on the high side, and maybe take another swing at it. But I think this one looks like it's got a lot of problems over time. See some other ones out here. On the plus side, it is Nera Bread that had a nice shot. A lot of shorts in this one. I think for a great deal, it had to do with that. The earnings weren't that great. It's just that they weren't all that bad. Now, if you look at it on the chart, one of the things you wanted to see was something around 1.7 million shares. You got 1.8 so far today. So it looks like you're going to have a breakout. It's not going to be the kind of breakout that makes me say, you know, this thing had 3 million shares. I would feel a lot more and a lot better about it. Again, watch for this to come back to 224, which is just $10 lower on light volume. And if it does, that'd be a much better sign that this thing is a legitimate breakout and where you could buy it in the market. On the other downside is Netgear, NTGR, the maker of routers, the consumer level router business, down on pretty heavy volume today and a big gap down. This thing seems to be one of these things that very tough to figure out into earnings what these guys actually make. But wireless routers and wireless modems, of which I've got, I'm sitting here staring at 2 of them, and I've got 2 more in a box. So I buy a lot of them. They make good routers, but let's not confuse a good company and good router with a stock price, because it all has to do with that. But this is actually fairly kind of what I was talking about in these asymmetrical plots where you've got lower highs and lower highs and higher lows. This one's kind of broke through on that. If this thing could consolidate out here and go south a bit, but the volume all dry up, this is not uncommon for these asymmetrical triangles, and that is the first break of these things is fairly wrong, and then you start getting ones that are a lot more right. Gilead, do we have time for that? Yeah, I think I have just enough time to pop it up. Down almost 10%. Just doesn't look like there's a whole lot left to go out here on some of these. But, man, this thing has filled all these gaps that originally started the big rallies. This thing goes back to 2014. What is that, April of 2014, when these things just gapped up day after day through that late April, March timeframe and set up those giant runs all the way up to 119. How the mighty have fallen back down to 65, 75 today. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to. Hang on for Tom O'Brien.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.